Hey guys, how's it going? Philip at Trade Genius. All right, Bitcoin's had a pretty nice run up and the sentiment's getting more bullish. So is it safe to get back in the water with Bitcoin? Well, I'm going to show you a few things that you need to be aware of because I think we're going to see a bit of a pullback that you can take advantage of before we resume our move higher. So without further ado, let's dive into this video and check that out.
Trade Genius.
All right, guys, so we haven't looked at the crypto fear and greed index in a bit, so we're going to take a look at that now. We're in this zone here where historically we typically get signals to indicate that there's a top. We're in one of those now. The previous one that we saw was back in February. This one was a little bit tricky because it flashed the signal, actually went and made another thrust higher and then collapsed. We can see that on the chart here back in February. This was where it signaled, made a move up and then came back down. But again, that area was a heads up that we were looking at a correction for the move up. And it did stay down for until about the beginning of March. So a couple of weeks there of corrective behavior. If we look again previous to that, where we were up in this area, this is back in also April and then also May 6th and 7th. Again, if we look at the charts, and this is back in 2018. So May 2018, again, you look at April was that one signal here. That was a big fast correction, absorbed it, moved up, and then we had our second one here. And that was a major top as far as this bear move. It basically signaled another lower high. So those have been pretty decent indications of tops as far as when we're moving up and down in the cycle. But one thing you will note is that because we've bottomed out and are actually in an uptrend, we're in an uptrend and an overall bear trend. But since we're in the uptrend, you'll notice that those pullbacks aren't as aggressive as they have been. Now, but still, you want to be aware of where they're at. Obviously, buying into where the crypto fear and greed indicator is flashing a sell signal wouldn't be the best entry. It'd be better to wait for that pullback and then buy. So that's heads up number one, that this move here is possibly getting tired and we could see a quick pullback. And if we do see a quick pullback, guys, basically what we're looking at is, I think a lot of people, the obvious level for a pullback is going to be, looking at this breakout area around 4,200. But honestly, I think that's going to be a little bit too obvious, and the sentiment really has changed quite a bit. So what we'd be looking at is probably the fib pullback. So what you're going to do is you're going to stretch this from the start of the move, and really your pullback zone is probably going to be more likely in the 45. I'm going to say 4,400 to around 4,600 would be the area. I think that you could see a pullback, and it's really not going to affect this up move much at all. If that level does not get reached, the other area that we could see a bounce would be in the 4,700 to 4,800 area. That's where price had pulled back to off of this up move, and we saw some support there. But so again, just keep those levels in mind. Now, the other thing that we're looking at as far as telling us that we're due for a pullback, not only are we getting up into our fib range from this move down, so we've got this fib range that we're into, and again, guys, that fib range has a target down here of 2331. So there's still the case where, yeah, we're still in an overall, we're in a bear market and this could play out, or we've put in the bottom and we're in a bull market. But just know that that fib level is still, if this rejects down, that's still a valid technical entry for a target if you were macro shorting this. Now, where I would say that's probably not going to be the factor anymore is if we pull back, we actually hold this area in here, anywhere from the 4,400 to like say 4,800 zone, just depends on which of those two levels holds, and then we make another higher high, probably negates this fib target, especially if we get a close above 5,500 on the daily. I think that really negates that, and in fact, I'd probably take that fib off at that point. So the other thing that we're looking at as far as the counts go, and this is the TD sequential count. I don't use them a lot unless we're getting overextended, okay? So load those on the chart, and what you'll see here on the chart is that we had a 9 count on the daily. And now we are at 10, 11, 12, 13, 14. Okay, so this move's getting overheated. The last time we had a 9 count, if we look, we had one here, got a bit overheated, and then a big dump. A 9 count here was just about at the top, and then a dump. So it's another thing that gives you a heads up that we're due for a pullback. And then we're also, the other thing you look at is, where do you have 9 counts? That's a daily. What about the weekly? We got a big old 9 count, okay? When's the last time we had a weekly 9 count? We had one back over here in May 2017. That produced several weeks of down. And then we had a 9 count on the weekly right into the meat of that run up. That got ran over. But once the other, so the thing is like when you have a 9 count, the other number count to look at is the 13. So we had 9, 10, 11, 12, 13. 13, the bar on the 13 could not be breached. And then that ultimately was the last attempt up, right? So we bounced, could not make a higher high on that 13th bar, and then price rolled over. So there definitely, you want to be aware of those bars. Now, what could happen is you consolidate and then the count resets, because what it's doing is it's looking to see if you are making a higher close than 4 bars ago. It doesn't matter what time frame, could be hourly, daily, weekly. It's just looking for that. So if you consolidate long enough, like here, you get a 9 count and then it pulled back. Count resets here because this close was lower, so now it's trying to count lower closes, right? So this count was lower than 4 bars ago, 1, 2, 3, 4. Okay, and that's why it resets. So when it resets, then it's like, okay, it kind of gives you the green light that your correction could be over, and then you could start counting back up again. So that's something to keep an eye on, guys. Here, again, we're on the weekly 9 count. The other time frame I like to look at is a 3-day chart. Okay, so here's a 3-day chart, and again, 9 count, 10, 11. As you can see, 9 counts, like got a 9 count here, kind of toward the bottom, and we bounced. Again, here, 9 count on this is the downside now, and another bounce. This 9 count appeared here, and then eventually we bounced a couple bars later. We put in the bottom and we bounced. So it's good to be aware of when we're being overextended. Here was a 9 count. This is a 3-day chart now. Again, 9 count. We got to 10, 11, 12, and then we started to see that fall off. So last 3-day 9 count bar we got was, look at it. It's back here, right near the top. So you want to be aware of where those things are, because they do give you a heads up. Again, this is just showing us that we need to be aware that we could be in for a bit of a pullback here, and it might not be a good idea just to get long quite yet. The other thing that I wanted to show you guys was, this is a 3-day chart showing the 200 moving average, but it's a exponential moving average, the EMA. So basically, we were riding that on that area of 6,200 or so of that support, and then we broke that. Now we've come back up and tagged it, and so that's another key moving average. And we know we've broken above the 200-day moving average, the regular moving average on the daily, which is a key indicator. Usually that is a good sign that the bear market's cycle's over. But now we've hit our head on this, so another thing telling us that we may see a bit of a lid here on this move and then pull back down. One other thing that you guys need to be aware of is basically the long and the shorts, and this is the Bitfinex shorts versus the Bitfinex longs, right? So a lot of people think that when you see a real high reading on the shorts, that that could be fuel for a short squeeze, and that's true that you could have that, but we didn't really see that here on this move up. See, this was a short squeeze, but notice the shorts weren't that high, right? But we still had that move up. Largely what this move was it was shorts probably getting squeezed, but again, more so that there was a volume void here. There just wasn't a lot of action in this previous price range, so there's just not a lot of people holding positions that are trying to unload. Moves right through. Where you're going to see that is up in the 6,400 area, because that price there is a point of control, meaning it's a high volume node area from the top in the beginning of 2018, basically. So you're more than likely going to see at some point price get to that 6,400 level, just because of that point of control on that volume there. But what I wanted to point out to you guys on the Bitcoin shorts and longs is that when you get the shorts getting down into this zone historically, will tell you that there's a short-term top in place. Okay, and what I mean by that is if you look at here where we got in here, we had this pullback, right? And then if you look, we're in that zone again, and we're getting overextended on the counts. And I can show you here where we had other areas too, where we got into this area here. Again, this is in the bear market, so the moves are going to be more dramatic to the downside, but you saw a top there. You got into it a little bit here, and then we broke that level of support. So again, quite a bit of signs saying that the move is starting to get a little exasperated. On the 3-day chart too, you're looking at volume starting to drop off. So not that it's something that I'd be overly aware of. I just think it's going to be a period of where we can correct and then rest up for another move higher, ultimately to get into this 62 to 6400 area. Most people think this is going to be basically an area that fades. I think a large majority think a great short setup there and we pull back. And that may be true, but I want you to point out what happened to Litecoin. So Litecoin experienced a similar thing, right? Because if we look at the daily, that's going to be this chart here. If we look at the daily, guys, what we're going to see is this line here kind of represents where Bitcoin was at 6,000. And what happened was Litecoin came right up into that zone, chewed on it, and then broke through. Okay, so this area here, even though that it was a lot of resistance because this was a large area of support and then finally broke with Bitcoin, and Litecoin was along for the ride. If you notice though, when it came back into that area for Litecoin, it kind of just chewed on that area and then broke through. So key thing to keep an eye out on is when we do get into this area, and obviously we'll update these videos, but as we get into this area, we're going to keep an eye on how price reacts in that area, because what we're starting to see too is a possible cup and handle form. Cup and handle formation basically means you're looking for a move like this, a rounded move, and then you get a correction and then a breakout. Okay, and the breakout would be a measurement of this area here. So that would be basically what we'd be looking at. And if we get the similar price action like we saw with Litecoin, then you're going to see this move basically up to here, this level here, and that's going to take you to about little over 9,000. So that's actually, if we see this happen off of this level at 6,400 and this pullback, but we don't get much of a pullback and it stays around that level, that's going to look really bullish for possibly blowing out that 6,400 area and making a pretty decent move up. You have to keep in mind, even though we made some really big moves up in the big scheme of things, there's not a lot of volume up in these areas. So once price starts to boogie past these levels of these previous highs, price could start moving quickly again to the upside. Now, I'm not saying this is going to happen in a few weeks, but I'm just saying as we get closer more toward that halving date, that you actually could see price velocity get up there. But there's a lot of work to be done to get up into these price levels. But key for me would be looking at this possible cup and handle forming. And then if we do form that here, we get this move back up to here, I think you could see a pretty decent move from the 6,400s up near toward the 9,000 range. So just keep that in mind, guys, macro picture on this. So to recap, I wouldn't be jumping in with both feet just yet here. I think there's plenty of, like I showed you with the 9 counts, the 3-day moving average, things like that we're getting overextended on this move. So, but I do think that a pullback, we could see another surge higher, one last push, but that would probably be a prime time short, and then looking to buy, let's just say around this 4,500 to 4,600 area. All right, so that's kind of what we're looking at right now, guys, as I think most probable types of outcomes. Okay, so that's going to do it for this video. I appreciate you guys watching. Please hit like and subscribe. We appreciate all the views and comments. And if you have any questions, leave them below. All right, guys, take care. Thanks for watching. Bye.
Trade Genius.